In on the show with his thoughts on the market. Sunil, hi, afternoon. Does it seem like the selling is going to abate? I mean, looking at yesterday's FII sell figure, that of 6,000 crores, seems like there could be some more pain in store for us.
Well, I think while some more pain from the FIs may be there, I think domestic buying is going to step up. I think over the last month or so, it's not least been FIs selling, and I think domestic fund managers who've been booking profits in mid and small cap have been raising amounts of cash. And I think today it's more than 200,000 crores of cash. So I think that is starting to get deployed. But naturally, it's going to the quality names, it's going to the larger cap first, because obviously they also want to protect the downside. Because honestly, clarity on earnings season, earnings on the international front are likely only from April. So from now on, I think it's the domestic fund managers who step in because they're sitting a lot of cash, picking those stocks where there's downside risk is less in terms of any untoward earnings or split, and also the whole reciprocal tariff and that scenario where they don't want any negative surprises. So I think selective buying, because overall, if you see Nifty on a 5-year average, it's now below its 5-year average on valuations. So it's no longer right to say India is very, very expensive. We are now closer to our long-term average, and I think interesting buying points emerge. I would still expect, just to reiterate, that to come from the DIIs rather than the FIIs. FIIs, there's still more clarity around the international scenario to come through, and they would probably wait for the Indian earnings season to take a call on specific companies and sectors.
So, Sunil, where is it that you're seeing those buying points with stocks?
Well, for me, it's clearly private sector banks are the ones which there's valuation comfort. There's, I think, a good market share for them, good growth prospects, and they haven't run up or they haven't fallen anywhere close to the market. So I think even if you look at over a 3-year perspective, private banks haven't really given that kind of return. So I think it represents a fairly sweeter spot from a valuation perspective. And I don't think there's real concerns around the quality of the management or anything. So larger private sector banks are my number one pick. Second, I would also be very interested to look at the whole cap good space, because a lot of the correction has happened there. Now, it's going to be difficult to predict which company. So I would probably say diversify across some cap goods, because I think the medium store of India is still going to be around a revival of private capex sometime. And hence those capital goods going through a V-shaped kind of order book and growth. So I think a little bit longer in the horizon, but if those corrections have happened significantly, which I think they have, I think selective buying on the capital goods, infra, building materials, those kind of infra supporting segments, I think will start to happen. So these would be at the two extreme ends, a safety pick from the private bank side and a slightly riskier, but with a longer term call on the capital goods space.
All right, so that's the take.